Okay, good afternoon. So welcome to the Ask a Financial Professional webinar session. This webinar is offered by Cal State Fullerton Extension International Program in conjunction with our instructor, John Wayne. The Extension International Program at Cal State Fullerton offers professional development and workforce relevant training to support the growth of professional talents in our area. We offer programs ranging from cybersecurity, user experience, and human resources. And of course, we also offer the class in Designing Your Financial Life, in which our speaker teaches for the last few years. In addition to teaching at Cal State Fullerton, our speaker owns and operates his own investment firm. John is a proud alumnus of Cal State Fullerton and is the founder and CEO of his financial planning group located in Placentia, just in our backyard. He is an enrolled agent and a CFP. He has been in active practice since 2005 and holds numerous licenses, registrations, and certifications. John is very active in Orange County, and he believes that everyone deserves financial education opportunity that are objective and biased and come with no obligation. And that is the intention of our session today. So a couple of housekeeping items. First of all, these sessions are being recorded, so they will be available to attendees afterwards. You're also muted for the duration of the presentation. John will share his insight about the mindset and approach to investing. The remainder of the hours will be available to answer questions. So feel free to post your question. Last time when we ran this session, the Q&A led to some great discussions. So don't hesitate to ask any questions that you might have. John, we focused on investment strategies last time and got some really great questions about, the various forms of investment options, 401k, savings and bonds, as well as, playing the stock market. It's been several weeks since then, and needless to say, the world has changed again. So with new challenges in our economic landscape, what are you going to share with us today?
All right, well, I will take over the screen share. Give me just a second.
Sounds good.
Happy Thursday and 4th of July week. I think most of us are getting Friday off tomorrow, so I'm always working. My joke is I tell my clients I work all the time, not full time. So, I'm grateful. I love what I do. Let's see here. Let's get the screen sharing. And all right, perfect. Okay. So you can see my screen, and let's have at it. All right, so I just wanted to share a quote that I think it's really meaningful, and it's by Mark Twain, and he said, "I've suffered a great many catastrophes, oh my gosh, I can't even say the word, in my life. Most of them has never happened." So I think most of the time we worry so much and we're about so many things that we have no control over that we end up not doing or not focusing on the things that we can control, right? And it comes back to just our own personal finance, right? Because that's a big part of our well-being and our overall health. Because most, you guys know this, most most divorces are because of finance, and most relationships end on financial matters. So so finance is a big part of our life. Let's just put it that way. That we can agree upon. So the three simple areas that we keep going back to is, when it comes to your personal finances, really around how are you managing your finances, how are you saving the money that you make, right? And then also, how are you growing your assets? How are you growing your wealth? So again, this is not about money, because money is something very elementary, right? It's just a dollar sign. We're talking about finance, which is very encompassing of like credit, obviously money, like how you make it, how you spend it, right? So the subject of finance is really the focus. It's not just about making money or growing money or whatever books or popular taglines that are out there. So again, where people go wrong is in the three areas is really managing their finances. It's not so much these two. Of course, growing is always the attractive area. That's the one that gets the most news, but it's getting excited about running when you're not good with balance and walking firmly, right? So, all right, so let's kind of, I want to touch on, this is a slide that I do for the class. And so let's kind of talk about some of these things. The first thing is what do we have, right? Your retirement equation, or you can call this your financial equation, or just substitute this with whatever, but this is your financial well-being, right? The things we have full control over is what? Our earnings, right? Our savings, the way we spend and the way we invest, right? We have absolutely full control over these things. And so, and these are the areas that really separates someone who's very good or have success with their personal finances is really how they're able to do well in these areas, simply put. So that's something we have full control over, right? As little or as much as we have, if we do a good job managing it and having good control over our finances, then it fares really well. The other thing that we have full control over is our choices of assets, liability, and how we position them, right? So, for example, like assets of, you choose to focus on building assets versus building liabilities, right? Obviously, the problem where is a lot of people mistaken assets for liabilities, and so they accumulate something that they have to service and pay each and every month or each and every day, as opposed to an asset that grows each and every day or makes you money each and every day, right? And where you position those assets, do you hold that inside of a tax advantage account, like real estate, or you own it through your Roth IRA, your Roth 401k? Where do you position those assets, right? And your liabilities, right? If you do a good job, your assets generate enough income to pay for your liabilities. That's the key. So really, and we mentioned this last time, is the key to retirement or financial freedom is all about building assets, because asset pays you passively, where you don't have to earn it, because your asset generate those income, and you use those income to finance your liability, which is your home, right? Because it has utility bills, it has property taxes, it has all those things. So those are the things that we're talking about and we want to focus on. The things that let's go over that we have zero control over is what, right? Our regulatory, if our current administration says this, says that, we have no control over that, right? We have very little influence, if anything, but again, we have no control. Policies, taxation, right? There's an article that was forwarded over to me, how the rich are now really being, they're doing some early tax planning, because if Trump is no longer in office, then they may lose a lot of their tax benefits that are granted, especially when it comes to the gift tax exemption and the lifetime exemption. So they're planning for that now. But anyways, we just don't know what the government is going to do, right? So that's something that's out of control. So again, going back to Mark Twain's question, just don't stress over it. It is what it is, right? But go back to these two things, right, that you do have control over. But just have perspective, and don't let it be something that you dwell on. And just from a behavioral standpoint, whenever we focus on expense, right? If we focus on negativity and things that really stress us out, guess what? It's going to stress you out even more. It compounds. And the other thing we don't have control over, market volatility and returns, right? Because the market does irrational things sometimes, right? That's why you have companies that are way overvalued, and you have companies that are way undervalued, and you have companies that they're bankrupt, but they're trading as if they're an operating company that is going to do just fine. So you have all of this. These, by the way, both of these things are great things that the media covers, right? And you hear about this every day from whatever news feed you have. Our news feed is inundated with this, in my opinion, garbage, right? That's really distracting. It really derails you from your planning, and that's why, you know, successful investors are disciplined investors, right? They take these things into perspective, but they know they can't control them. But what they can control is, again, how they manage their risks, how they position their assets and liability, how they, again, how they hedge their, you know, how they protect their position. And then the other thing that we have partial control over that is important to keep perspective of is our duration of employment, right? Who we choose to work for, right? Our earning power. So if we want to make more money, you know, go back to school, get more certifications, learn new skills, etc. Right? So it's really important that when we have time, invest here. I've done that for my personal career in terms of the you know, the licenses, the certifications, the designations that I have, and experience too. I learned by doing, yeah. So. And then partial control over our longevity, right? How long do we plan on living? So that means, you know, have a healthy diet. You know, dieting and nutrition is really important, just like when it comes to personal finances, is saving and budgeting, right? So dieting and nutrition for health and for your health longevity, and then for your personal finances, really saving and budgeting. Something very simple, but a lot of people don't really understand or don't really practice, or if they do, they don't practice it well. Just like in any sports, right? It's the fundamentals. That's what they practice all the time. So what we cannot control, just know that we can plan for it. And that's, you know, part of that is financial education, right? Being on this webinar and participating in this in this public service. So there's one resource. There's one more that to add to our many that since we started this webinar series. This is called the SAM program. It's Smart About Money, and it's from the National Endowment for Financial Education. This is pure education. You're not getting solicited, just like our webinar series. You can be anonymous. Nobody's going to make you feel uncomfortable. It's all for your benefit and pure education. So there's no slant of sales or any of that. Yeah, so actually I'm going to switch real quick. And here's the website. So if you go on, by the way, there's resources to help you manage during COVID-19. That's there too, just like the website that we share with you already, that it gives you 10 suggestions, right, to manage your finances. Everything from, you know, government programs that are available to you at the national and then to the local level, and just steps that you can take to shore up your finances and be on top of things. So this is a phenomenal website that I share in my class, and what's great about it is it's very methodical. It's very easy to follow. So the free online courses, you can do it at your own pace, and it's a complete course. It's extremely informational. And again, it goes back to my philosophy of people don't need financial advisors, financial planners. What they need is a financial plan, right? A financial education. So yeah, so don't think that you need to work with some professional. You can really manage your own finances just fine. But when there are like complications or very unique situations that you're put in, then that's where a professional can come in handy, right? But yeah, I truly believe you can do most of your financial planning yourself. And this is a great start. Because planning, and then when you're executing certain things, that's where you bring in professionals, right? Because they can do certain things you can't do, then, you know, that's where the line, that's where you cross the line and you hire a professional. But so you can start with the money basics, right? So some of the things that we cover already, but this is a very disciplined approach, right? Where if you notice, like the topics that are covered, right? From like what we talked about, from spending and saving, credit card debt, right? Insurance, investing. It really gives you, again, good basic information that's very easy to understand. It's all here. And again, you don't have to submit to any type of information sharing or any of that. And what's great is one of the things that I practice with my client is just having a value-based conversation, right? And it's really important because life value quiz, right? I challenge you guys to take this. It's a 20-question quiz that really highlights your values as it relates to your finances, because this is how we're wired, right? Because of the way we're raised, our culture, the way we value our faith, our family, our career. How does that relate to our finances? Well, it's all here. And so if you take this quiz, it will give you such great insight on just how you're wired, right? And so this is great. Common questions is all here. It's just phenomenal. And they make things, look at this. I mean, from all of this, right? Your emergency fund plan. And I know we've already got some questions, and a lot of this will address those questions that are being asked. And again, remember, personal finance is more personal than it is just about the finances. And at the end of the day, it's your finance. Don't leave it to some professional to tell you how to live your life or how to define your quality of life or how to define, your values. It's your responsibility to really take hold of your finances. That's the big takeaway and message. And so take it seriously, and these are great tools for you to do so. And the stronger, the stronger your personal education is, or your research, the more effective you would be working with a professional anyways, right? So, and at the end of the day, it's your money, it's your time, it's your quality of life. And so you got to make the investment. And so this is another very powerful tool that it's all here for you, right? This is a big one, housing expenses. So anyways, it's all there. So that's a great, wonderful resource. So let's get, I guess, right to the questions then that have been submitted. I'll leave the screen onto this website just to kind of stress the point home while, why this is so important, that this is a great tool, because I know we only do an hour of this, right? And it's bi-weekly. This is not meant to give you all the answers. There's no way, because again, your profile is very unique. So it's like taking, medical advice from Dr. Phil, when you're watching, or Meet the Doctors, whatever those TV show is. People need to realize those things a lot of them are for entertainment values, right? So and they don't know your profile. So be very careful. Just be critical and be mindful. So I got a list of questions, and I'll go through them now. The first one that was. Actually, let me expand on something.
Want me to?
Yeah. Oh, yeah.
Read it off to you?
Yeah. Actually, I'm going to go back to some of last week's question. I'm going to expand on it. So let hear.
Oh, that's even better. Yes.
Yeah.
Go
so
ahead.
The questions were like financial professionals, right? How do I find somebody who's qualified and whatever, right? So here's a simple slide that talks about, look at their licenses. It's really important. And I talked about that last time. Their licenses are their real estate license, their insurance license, their brokerage, whatever, right? Their registration is like if they're registered with SEC, like I am, and I also have these licenses. I'm also real estate licensed. But like their certification, right? Like I'm a CFP, a certified financial planner. So there's an actual board for that, like the CPA board, the medical board. And then there are degrees, right? So you have a master's degree. DDS is like you're a dentist, an MBA, a JD, but these things are very academic, right? So take it for what it is. Don't think that somebody has an MBA that means they're very good at personal finance or that qualifies in some way. So I just want to make sure that people don't take it for face value. They really get to know the person, and because one of the things about my industry is, or like most professional industry, I think, well, mine I can speak to, is that a lot of people embellish. And they would say like, oh, I have 35 years of financial services experience. And then you look up their licenses, right? You go to the Department of Insurance or FINRA broker check, and you realize they just got licensed like 2 years ago. And you're going, that's strange. How is it that they have 37 years of experience, but they just got licensed like 2 years ago? So, be careful of that. Another thing to be careful of is some of these designations that I see a lot out there. It's like registered financial consultant, certified senior advisor. And by the way, in our industry, we have a lot of fancy titles that we give ourselves: wealth manager, wealth consultant, private wealth manager. By the way, everything is private. Adding the word private is just kind of odd. It just stresses, I don't know, something. But yeah, financial consultant, financial advisor, financial planner, financial coach, etc. So just be very careful that, of these. Don't get too caught up on titles, right? But one thing is I've seen a lot of folks using this, and these are, yeah, they're not real. In my opinion, they're just read into them. They're not strict. It's something that you can easily obtain. And an example of that, because I've seen somebody who advertise and they target seniors with these two designations, and it sounds really impressive, but it really isn't. It's a simple educational process that they go through, and they pay a fee, and then they use it for marketing, right? So be very careful. There's like, for example, there are folks out there on LinkedIn that have these designations after their name, like a CFE or a CFED. It sounds as if like they have like some type of doctorate type program, right? Or no, it stands for Certified Financial Educator. And by the way, that's a very easy designation to get. It sounds very official, certified like this. There's a bunch of them. Certified Financial Education Professional, Certified Financial Education Instructor. All of this is, in my professional opinion, are all well, I'll tell you my personal opinion, they're really BS. And so they're marketing ploys. They're marketing programs that any nonprofit can set up any type of designation and award it to any one of their members. Isn't that kind of scary? So you have somebody that's going around promoting themselves as a certified financial educator, and they're a salesperson. So it's insane. And because they buy into their curriculum, they use their materials to come across, as if they're educating you, and then they sell you something. So be extremely cautious of the things out there. And another point is, they disguise themselves as they're part of a nonprofit organization, like some of these nonprofits. So they say, oh, I'm not whatever, I'm part of this nonprofit. I'm here to educate you. Again, very, very, all marketing ploys. And so you pay, even though they're a nonprofit, but they pay a membership. And so they use their materials so they can sell and promote themselves. So be extremely careful, be critical. Really look them up. And so another thing too is like, oh, they're a 5-star advisor, they're as seen on Fox News or something, all of those, or they're a best-selling author. They can get something ghostwritten. They can pay somebody, something like this, so they can call themselves a 5-star advisor. It's just like one of those marketing things that you pay into, and they put you on their list. I mean, just be extremely cautious. The Better Business Bureau, they just sell membership. They're not a government agency. The building that my office that I purchased from, that I own, it's from there used to be the Better Business Bureau of Orange County. So there's a whole history there. Just be very careful when you see, advisors really, or folks out there really promoting themselves as if, like, I can be mentioned in, Entrepreneur Magazine or Fox News or something like that with some article, and I can use, loosely, as seen on yada, 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 right? So just be cautious, because there's so many network marketing organizations out there that are targeting you, right? So they're choosing you, just like the old saying goes, choose your friends, don't let your friends choose you. Same thing, so be cautious. And anyway, so that's my point there that I want to elaborate on. Oh, actually, I had one more thing to share. This is a funny clip art. Is this too, I don't know if you guys can read it, but it says, don't worry, I've done this hundreds of times, right? My experience can just mean making the same mistakes with increasing confidence. So you can have someone who says that they have 30 years of experience doing something that is bad or not optimal, or just that doesn't mean anything. So, take it with a grain of salt, and really do your homework. Anyways, just kind of some humor there. All right, so getting back to the questions. So the questions, one of the questions that was asked was, not sure how much to invest in our home, or if it makes financial sense to buy a new one. So not sure how much to invest in our home. or if it makes sense to buy a new one. So if you have a home that, again, buying a new one, well, let's talk about your, again, I don't know because the question is kind of broad, but look at your home. There's a lot of great improvements that you can do, right? Buying another one may be something that's out of your budget. It kind of scares me because some of these questions seems kind of casual for me, where to me as a practicing professional, it's something that you have to really do a full assessment on as far as their existing home, right? What value there is there, what can they do? And then look at, okay, if we're gonna make a transition to buying a new home, what is that going to be all about, right? Because there's going to be a lot of expense and obviously time too that it's going to cost you to sell a home or keep your own home and find a new one and then renovate that new home. It's a big investment, and make sure that you're still able to have tax advantages for doing so, right? So there's multiple areas that you have to kind of go through like a checklist to kind of look at to see if it, that you can discuss all those topics, right? As far as expenses, as far as benefits, as far as opportunity costs, there's a lot. So that's my answer to that question is, again, that's where you definitely need to meet with your financial professional, your tax planner, not a tax preparer, because they'll just prepare your taxes, or a financial planner to really help you, think things through, right? So, or talk it over to your spouse. Again, really, and write things down, right? And make sure you get all of those fine points addressed, because it's a big undertaking. It's a big decision. What factors should influence my mutual fund choice? What factors should influence my mutual fund choice? Okay, so this is another broad question. Again, for me, I can tell you, I'm not a big fan of these social media platforms. So I don't invest in it. Yes, some of them have done really well, but I can care less because, that's one of my factors is that it doesn't align with my personal values and beliefs. So I don't invest in those things. Just like I don't invest in companies that like vaping companies, marijuana companies. I don't. It's just, yeah. So that's a factor, right? There can be other factors like what we covered in our last, and I'll bring up this slide real quick. These points, right, that you want to take note of is, your time horizon, right? That can be a factor. The timing, right? Let's say you want to buy whatever stock right now that is extremely high, right? What's the timing of that? You're buying it at an all-time high. Are you okay with that, right? So your strategy is buy high, hoping to sell higher, right? Where most people, their goal is to buy low and sell high. But most of the time what they do is they buy high and sell low. So anyways, right, take into account fees, charges, if there's anything, take a look at the landscape, how inflation's affecting the market conditions, things like that, which is inflation, right? Or the market condition. How is that going to affect your taxes, if there's any? What are the risk factors, right? So these are good factors. And all of that will then give you a good, assessment of, what's the total benefit of doing that investment, right? So, all right, so that's that.
Well, John, related to that question, I guess it ties into some of the things that that came up in different conversations, because the factors that influence mutual fund choices versus stock purchase choices versus other types of investment choices would be different. So out of this list, how can we discern what makes sense for one type of investment versus the other? Yeah,
so again, mutual funds like ETF, you're getting like a package, a portfolio of equity positions, right? Stocks. So let's say this mutual fund is a balanced mutual fund. So you can have a little bit of everything, or you have a sector focused type of fund where instead of buying, let's say, BFA stock or just Apple stock, right? So BFA stock belongs to the financial sector fund, right? So you can just buy the fund and you can have exposure to the whole financial sector. Or you're just like, what, I don't like the whole sector, but I like Bank of America stock. So you just buy Bank of America stock. So that's a good example of taking a fund approach, meaning you buy a collection of them, relating to one sector like tech. But that's a broad. So now there's tech that deals with so many different areas, right? So you buy one of those and you get a concentration of them, like a diversification of them. So instead of buying one stock or one company, you're buying multiple companies that fits the same criteria, right? So so again, really think about your financial situation and what you feel comfortable investing, because really what you feel comfortable is your risk profile, right? And how long you plan on holding it, right? And where do you see that value? Because when investing, you're looking for value, right? So it may not be worth much today, but it's going to be worth a lot tomorrow. So you're buying into the future value. You're buying it because it's going to have great future value. So obviously, or unless you're on the other side where you're buying a company betting that it's going to go to zero, right? Then you're betting, then you're shorting the stock, or you're buying a position that you're going to profit from as it goes down versus going up. So like real estate, right, is another asset class. So real estate stocks, bonds, they're all there. Do your own assessment. They're just like you have a lot of investment choices. So you can buy a business, you can start a business, right? To me, that's an investment as well too, right, of your time and your money. But go, like, this is a good start, right? How much capital is going to take, right? If you're going to invest in a home or a rental property or a business. So hopefully that answers that question. Let me see.
It does.
Yeah,
it does.
And let's see, what's the next question that I see here? What's a good way? What's a good way that I can invest? Well, again, there's no wrong way. By the way, like, just like there's no, there's many approaches to investing, and there's many ways to invest, and there's many things to invest in. There's really no wrong answer. They're just different pathways. Just like there's so many different types of cars nowadays, right? You have your diesel, you have fuel cell, you have hybrid, you have regular gasoline. You take your pick. You have your flying cars too, which is helicopter. Anyways, there's a lot. So just kind of, there's a lot of flavors. There's a lot of choices. There's many words to describe it. But just at the end of the day is think about what's the best way to get the best return on your money. And that's, you got to do that research yourself, and you got to feel comfortable with where you're going to deploy your capital and your time, right? So one of the things I've learned early on, my mentor tells me, John, do you know where you can invest where, he asked me this question, where you can invest where you can get 500% return guaranteed, or at least? And I go, wow, where's that? And he said, your time management. I go, what are you talking about? So basically, like, if you invest in time management, and generally if you can optimize your time, you can get things done 5 times faster or 5 times more efficient, right? That's a 500% return. So like that would make you, very productive in your career, and that means you can do more projects. That means you can make more money. So I'm a big believer, if, like, especially your student is investing in yourself, right? By getting more skills or sharpening some of your skills that are worth a lot in the marketplace. If you're a great coder, if you're a great designer, sharpen those skills. If you want to add to it, right? Invest in those things. More certification that makes you more employable. That's an investment in yourself and your business, right? Because now you can charge more. So that's a great investment. I'm a big believer that start by investing in yourself first. And when you have some excess, then use that excess to invest in assets, right? In other things as well too. So that's how I built my wealth. Is first, and I continue to invest in myself, obviously, in education and things like that, and in relationships and a lot of professional education. And then at the same time, I'm also deploying my money in, investing, so the building that my office is in, I made improvements to the building, so it's now worth more. It's a better place to work, et cetera, et cetera. So there's a great return on investment there, as well as putting money in the market, right? So Yeah, especially right now when the market is doing well, you want to participate in that. So I'm doing that. Because I think one of the question was, I think as a student, how can I invest my time and money for future savings? Well, you start with saving. It tells a lot that, again, just like a great investor is someone who's a great risk manager, someone who has great finances, truly, are those who are very good at managing their finances. And it comes back to, very simply, they know how to save. They know how to put money away smartly, in a sense that they're reducing their debt, especially bad debt that you have no tax benefit, meaning you cannot deduct the interest. That's bad debt. Good debt is debt that you use to buy an asset, right? And the interest on that debt you're able to deduct. So the government, the IRS is giving you an incentive to do so. Is that incredible? They would save it towards, or they would save up so they can buy a larger investment, right? So like if I didn't save, I can tell you this, I wouldn't be able to afford a building, or buy a large commercial property or any commercial property if I don't have savings, right? So, and if I don't have savings, I wouldn't be able to take advantage of this market, the very volatile market where there's great value, right? There's great companies that you can invest in, right? If I was just a great spender, well, I would have nothing to invest, right? Because all that money is gone. So I choose to, like, personally speaking, if I'm going to spend my money, I spend it because it's coming from an asset that I've invested in that generates me enough income for me to use that money to spend. And I really am very careful what I spend. And then whatever is left over, I use that to reinvest, right? To make to make the assets that I have even more valuable, or I would buy more shares, or I would find ways to make it even more valuable, right? By making improvements on one of my rental properties. So I know how to reinvest. So the key is, it's good to invest, but you got to know how to reinvest as well too. And think, one of the things I learned from my dad is you got to look at long term, right? So that's how investors are successful, because they see long term, and you got to be patient. There's no silver bullet. Play the long game, right? Warren Buffett said in one of his bios when he was younger, he said that he was going to be a very wealthy person, because he's going to be a very wealthy person if he can live long enough. What a great statement, right? He already knows that, if I compound my investment and if I keep continuing to reinvest, how very little, even if you have a penny and you keep reinvesting, at some point it's going to be worth dollars, and it's going to be worth hundreds of dollars, thousands of dollars, and then tens of thousands of dollars, and hundreds of thousands of dollars, and then millions of dollars, right? So I'm in the same boat where I'm very confident that I will be very well off, because I am constantly reinvesting. As simple as that. I reinvest more than I spend. It's very simple. So if you add it all up, again, very simple. I invest more than I spend. So, and I reinvest more than I spend. So there you go. How can a person that does that end up having a terrible retirement or a terrible future? It doesn't add up, right? It's pretty simple. All right, so the next one, how can I get rid of, this is the last one that I have, and then Shelley, you can step in.
Yes.
How do I get rid of my student loans and debt? Well, start paying it off, my God. Especially where it's bad debt, especially if your income is, now that you're done and you're in the working, now you're working, if you make more than, I can't remember what I said last time, but I think it's like, what, 82,000 or 75,000 or something like that. Then the interest on your student loan is no longer tax deductible. So that's bad debt, right? So you might want to do everything you can to pay off that student loan beforehand. I take a very aggressive stance, and I tell my clients, look, before you can look into investing, pay off your student loan. If you can't even do that, then you don't have good financial management and discipline. Because remember, the student loan is costing, like, one of my clients like tens of thousands of dollars, right? What other investment is going to guarantee you that rate of return, right? Guarantee you that? None. And matter of fact, if you make money in that investment, you got to pay taxes on that growth anyways, then you use that to pay for your, for your debt. That doesn't make sense. Just pay it off. And so pay it off as aggressively as much as possible, and be disciplined, right? Because I think most students, especially my younger clients they graduate from medical school or residency, right? And now they got a great job. And of course they go buy the nice cars because they feel like they owe it to themselves or whatever. And so that's a bad start. That really is. You need to prioritize. You still gotta work for another 2-3 years, right, and pay off that debt, and then reward yourself with those things. But yeah, and again, unless there's, but take a look at your whole profile, right? Are you gonna get if you're gonna lease a car, make sure you can deduct that. There's a lot of things to take into account, but just you got to prioritize, right? So yeah, and know the student loan debt. How's that going to affect your financial picture, right, and your cash flow? And if you do understand that, then I think you'll probably come to the same conclusion that yes, you need to. That's your first priority. And by the way, that's investing in yourself, right? That's my argument. Look, you're paying yourself first, and you're investing in yourself by reducing your debt, right? So think of a company, you as a company, right? Your company has a balance sheet. You have assets and you have liability. Right now, you have a liability of $100,000. Right, on your own personal balance sheet. So to make your company a lot more stronger, what do? Pay off your debt. Now you're worth more. Ta-da! Pretty simple. Just like a lot of people think that you got to invest so you can grow your wealth. You can also pay down your debt and also grow your wealth, because assets minus liability equals your net worth, right? So if you reduce your liability, what happens to your net worth? It goes up. If you keep your liability the same and you increase your assets, guess what? Your net worth goes up. Okay, so you want to take a risk and put it into the asset side and grow that, because there's risks, or you pay down your debt and you get a guaranteed return of whatever money that you save that gets added to your net worth, right? Same thing, pretty simple, right? So, all right, I'll turn it over to you, Shelley. Yeah.
Well, sure, John, because this question actually ties into what you're just talking about in terms of decrease your risk and decrease your liability and increase your asset. So in thinking about that, the question is there a good reason for borrowing against 401k or withdrawing from the investment account to pay down your mortgage or, decrease those liability?
Okay, that's a loaded question. But when you withdraw from your 401k, just understand what's the consequences, right? Because of COVID, I don't know if people know this, but you can withdraw up to $100,000 per person. So if I have multiple accounts, I can't do 100,000 per account per person, right? Husband and wife can do 200,000 technically. They can withdraw from their 401k account early. Let's say they're only 40 years old, right? Normally, when you withdraw from your IRA, your 401k, your 457 for your 520, well, not 529 plan, I'm sorry, from any retirement account that you have, like your 457, 403b, all those accounts, the government is waiving the early withdrawal penalty. So normally you have to be 59 and a half, right? If you're not, then there's a 10% penalty and the state tax on another like 2.something%. So it's actually more than 10 total. But anyways, they waive that. And also another benefit is you get to defer that over 3 years, meaning like you take out $100,000. So for 2020, you recognize 1/3 of that, 100,000. So that's like 33,000. Next year, 33,000, 333, 33,000, So you can split it over 3 years and pay the taxes. It's pretty cool. But you don't have to pay the penalty. How awesome is that? So if you're affected by COVID, and by the way, that definition is extremely generous. Like for example, now you have to put it with your kids, you're negatively impacted, you can pull from your retirement account. But anyways, yes. So make sure you understand those nuances, talk with your financial professional. So when you take away from that, understand the ramifications, but understand opportunity costs, right? Because you have your money in a retirement account and maybe you have limited investment options. Now you want to pull it out and shift that money somewhere else. You better make darn sure that that somewhere else is better than where you have it, right? Then go for it, right? So most people take it out because it's a necessity. Other people take it out so they can literally buy their second home or buy their first home or pay off debt or because they have some financial situation or invest in a business that it's going to be awesome. Hopefully, obviously that's the idea. Obviously nobody wants to invest in a business that is not good. So yeah, that's up to them to make that risk assessment, right? Why would, let's just say I say, yeah, go for it. Hopefully you're critical enough to say, on what means, in what context. My point exactly. Again, in the context, it's got to be in the context of your financial plan, right? So, but yeah, so, those are some examples where people would take money out. But just know that, that there's a cost to do that. So, yeah. Did that answer the question? I'm not sure, because there was.
I hope so. I think the
there were some
question
points
was
in there that I wasn't sure if I hit those points.
right.
But,
I think they really just want to know whether or not it makes sense to be withdrawing and,
Again,
sort of
it's not a hard
mortgage.
yes or no. It really depends. Again, all of these questions, it really depends on their profile. So, yeah.
Good point. So
Yeah.
to
But
your
it's
point,
not like I
speak to
can't
their
say, oh, you
professional.
don't do it. Like, you can, and there's people that do it and they do a good job managing it, right? And there's others that do a terrible job and yikes. So they rob from their future retirement and whatever they invest in, didn't work out. So ouch.
And we heard back from this person who asked the question. She said, yes, and this answer in my questions.
Awesome.
The goal is to pay down the mortgage. And so, like you said, reducing
okay. So,
yep.
Okay, so the goal is to pay down their mortgage. Oh, okay. Let me give you some context there. So, because right now, well, not right now, but because of the new tax law that was that took effect since I think it was 2008, and it's now the standardized deduction for a married couple is $24,000, right? And so before, most people, the standardized deduction was way less than that. But their itemized deduction, and a lot of that itemized deduction came from the interest on their mortgage, right? So the interest on their mortgage was like about 24,000. So now let's say, 24,000. So you're able to deduct 24,000 because you have that much mortgage interest. Well, the government gave you 24,000 by default. So no longer is your, generally the mortgage broker or the insurance broker or agent, sold you on buying a house because like, oh, don't worry about it, because you can write off the interest. Now you're kind of like, well, no, because my mortgage interest is just as much as my standardized deduction, right? So that sucked. So people that are renting are getting a $24,000 deduction to start, right? And you, on the other hand, has to have a mortgage interest of that much to match their same standardized deduction. Anyways, have that conversation with your tax planner, and that will shed some light. Because right now, if you're not getting any tax deduction on your interest, then yeah, you're better off paying down that mortgage, right? But taking it from your 401k and doing it, again, you got to do the math to see if that makes sense. Because taking out of your 401k will be a taxable event, right? And so, so really do the math there. I just want to provide that context of, you get a standardized deduction of 24,000, and if people have mortgage interest of like say 14,000, well, that's not a benefit. So yeah, no longer is your mortgage interest, a benefit. So now that's bad debt. So anyway.
Well, there's a lot to consider. That's for sure.
Yeah.
I mean, you talked about the fact that, investments should be done on the basis of what you're capable of and what you can
in the context of your overall financial profile and plan. So,
and really not let these noises around us, the noises, the economic noises, as well as what's related to COVID-19.
These catchy headlines like, oh, learned how to, be very careful with those. Those are designed to, it's like clickbait, right? To really, be very careful. So,
right. Well, so there is another question that's sort of coming from a different angle and might be related to an earlier question about investment on the homes. The person is asking, what is your thought on purchasing solar panels?
Oh, like
The
purchasing
person,
solar panels, like to
yes,
add that to your home, right? As a value
yes.
add. Yeah.
So they're
So
saying that, you know, they're spending about $150 to $600 a month on, I assume, electricity. And so solar panels are $200 per month for 20 years, so about 35,000 altogether.
okay.
And they plan to be there for quite a while and want to pay off the solar panel in 5 years or less. In that instance, does it make sense to invest in that type of improvements to your home?
You know, that's a hard one because I don't know the value of the home. And believe it or not, like some houses, if you add like solar panels, it's harder to sell, right? It's harder for you to, and not just that, but I mean, the math sounds great, but 30 years from now, that solar panel is not going to be as efficient. It's not going to be as efficient, and that may just be something that I think there's a lot. I can't give a clear answer to that, and how you finance those solar panels too. If you're going to buy it outright or you're going to finance it, and then what type of tax incentive you're going to get as well too. So that, yeah, you got to factor all that in. But yeah, just like for me, if I buy a house, I prefer one without a solar panel. I think it's ugly, and you know, unless you get one of those cool solar panels like from Tesla that looks like tiles or something like that, but that's just my preference, right? So just be mindful of that. My pet peeve has always been like, if you're going to spend money to save money, that that doesn't, to save something on taxes, that doesn't make sense. You got to really do the whole cost analysis and the total benefit of ownership, right? Going back to that formula, and weigh that out. I can't really give a clear assessment on that, but I do know that one of my clients had solar panels, and we looked at their financing, and my gosh, it was really high, and it didn't make sense because whatever benefit that they're going to save, they were losing it on the interest payments they're making on the financing of the solar panels. So just kind of, yeah, and you have an asset that I think is like anything. It's just going to be, it's like a computer, it's going to be worth less and less, right, as time moves on. So yeah, and again, like for me, if I'm buying a house, I prefer one without solar panels. If they are, it better look nice. If it's terrible, then I don't think that's a house I want to buy. But it's hard to answer without the numbers. So yeah, but it's not a clear, yes or no. Yeah.
Well, John, I think, we can continue to have a lot more to share with the group because there's so much to consider. I know we're coming to the end, so I want to ask if there's a parting wisdom you want to share with the group, because we talked about really ignoring all these other noises that are just, of the moment or things that doesn't really help with your long-term decision. What would be a good way for people to kind of filter out all these information, a good source of knowledge, or a good source of news, or a good source of information that people can go to as they make all these decisions around their finances?
Yeah, so no, that's a great question. Now we have a lot of, I think that's hard to argue, but a lot of people have a lot of time in their hands, right? And they spend that on Netflix, and they spend that on streaming services. We've seen the hours are just astronomical, right? And that's why the stock is doing really well as well too, these streaming services. So they're taking up a lot of our time, but I think we're not, we just don't use our time productively. And that's why I stress like this so much, right? Take an online course, and really refocus on yourself, right? And I really mean yourself, because that's going to connect to your finances, your health, and everything. So keep busy, find things to keep yourself busy and productive by something like this, right? Especially when when you know that you don't have a good handle of your finances. Well, here's your opportunity, right? So I believe despite people's religious belief, and mine is, I believe God doesn't give you things. All God gives us is opportunity, right? So whatever that you prayed for, she, whatever, God gives us opportunity. And so here's the opportunity, right? The opportunity to learn, to reassess. It's really there. And what's amazing, the miracle of prayer is whatever you look for, you find. So if you're looking for positiveness, and you'll find those things. If you're looking for distracting things or things that are negative, again, whatever you focus on expands, right? You'll find those things. And that's what, to me, is amazing. So if your focus right now, like mine is to look for opportunities for investments and take advantage of the disconnect. And that's what I'm finding, right? And that's where I'm finding success. And so instead, I can be focused my time on, I don't know, other things that are, let's say, not productive, or because now I have more time to refocus on my business. Like we're redesigning our website, which is terribly out of date because, we don't care about our website because we get referral, business only. And so, but it's about time to do. So I'm keeping myself busy, occupied by that. I can easily choose to do, non-productive things, but I know that, I have like ADHD or something like that. I don't think that's self-diagnosed, whatever. But that's what I do to keep myself busy, by doing, as productive things as possible, and surrounding myself with good people that challenge me. That's my 2 cents. Again, you have to understand the media, that's their job, is to entertain, to get your attention, to get you to be focused on them, right? That's their job. So you can't fault them for that, but just know that those things are really not productive. I realize what's really hurt my investment, to be quite honest, is listening to so much of the news, right? If I just focus on my investment discipline for the long haul, I would have done way better. But because you hear, and the news is very convenient. When things are good, they load up on all the good things. When things are bad, all the things that they've been deferring, they bring that out of the closet and they piled it on and give you this crazy Armageddon scenario. Again, that's their business. They do a great job at it. Just be careful. Same thing with internet as well too. There's so much things out there that are meant to distract us. Clickbait, that's what they're called. It's all about driving advertisement anyways. It's no longer like quality of the content. It's just all selling advertisement. So again, take the time to, take the time to go back to the basics. I'm telling you, it's all there. And you don't need to go far to find these great resources, right? Like, or pay for anything. These are free, and they were designed by great professionals with great intentions to really be helpful. So take advantage of it. But just, if there's one thing, so it's clear, there's always opportunities. I learned from my dad. Like, I remember, I shared with him something when I was in high school about, like, oh my God, like the market's bad. I'm afraid, there's not enough jobs or something like that. I don't know. When I was younger, and my dad said, look, like, don't worry if there's jobs or not. Worry if you're competent, right? And so I believe in that. If you're a competent person, trust me, there's more. Don't trust me, just the marketplace has more jobs for you than anything, right? It's when you're not competent, nobody's going to hire you because you're not valuable to the marketplace. Same thing when preparation meets opportunity, that's luck, right? That's awesome. The worst thing is there's opportunity and you're just not prepared, right? Like my story and our first webinar, where I've been preparing myself for something like this, right? And then now I'm realizing, wow, I could have been more prepared. So I would have taken on even more opportunities, right? And so, but I've learned, and guess what? Another 10 or so years, there's going to be another thing like this. And guess what? We're right back to where it is, but I'll be, 10 years wiser, and I'll have a lot more financial resources to deploy, and a lot more other resources to use at my disposal to take advantage, right? So, prepare yourself, always prepare yourself. You can never go wrong by investing in yourself and your education, and learning and getting unique, different perspectives. That always helps too, right? So take advantage. Again, this will happen. There will be some other crisis. I can assure you there will be another one. You can call it whatever. If it's like some geopolitical, whatever, right? There's so many possibilities. So get ready and save and have good discipline, because yeah, and that's the other thing, FOMO, right? People fear missing out. Again, the word fear is everything. They fear that they're going to lose, their share price is going to go to zero. So guess what? They sell it. And then when it goes up, they're feared that they're going to miss out. So they're fearful again. And so they buy it. And then when it goes down, it's just sad, because they don't have good, when we don't have good control and good discipline, and that comes from having a clear picture of your finances, then you're just very reactive, and that's a bad state to be in. So, so yeah, fear drives, as the price goes up, and fear drives when it goes down. So, hope, fear, and, that's not a good investment strategy, or hope and fear, and greed, right? It's the same. I think fear is the underlining tone of it all. Their fear of missing out, and fear that they're going to lose everything. So they take these irrational actions and lose their long-term perspective, and they lose it to there's a great quote that I think Warren Buffett said: the market is the perfect mechanism that transfers money from the impatient to the patient. So there you go. Another word of wisdom from Warren Buffett. But yeah. All right. I think that kind of concludes it, right? So.
Well, John, thank you so much. Not only for today, but for being here for our community for the last 2 months, really, since the start of this whole ordeal. If you really enjoy hearing from John, know that he is teaching our Designing for Financial Life sessions to be offered later on this year. So keep your eye out and sign up for those sessions. Extension International program is dedicated to provide our community with access and resources at the time when things may not be so clear. The question is, will the recording of the session be available for participants? Yes, there will be videos sent out next week per our team member that the participants will be able to see a recording and be able to hear more of John's take on different issues. We know that this will be second to the last of sessions in this series. There will be one more session next week on sort of the investment principles during this particular point in time. It will be next week, Thursday at 4 p.m. Please join us. We look forward to having everyone listen in and provide your good thoughts again. So we
and submit your questions. Yeah.
Yes.
If you have questions early, contribute. So it helps with the purpose of this webinar is to be helpful, right? So the more questions we have, and the more more specific the questions, the more it's helpful. So
yes.
And there's not a word limit, right? So the more content you give, the better. So
it's not Twitter account. Yes.
Yeah. There's no limit.
No. But John, thank you again, because for your willingness to share this with us, especially sort of bringing in the context of everything that's going on. I'm sure it has been very helpful, and we appreciate you making yourself available for these questions. Please come back to us next week and join us in the last of the conversation, and look for John in the future classes that he's going to be offering. So with that, I thank you for your participation and hope everybody have a wonderful and safe 4th of July weekend.
Yeah. Cheers to that.
Yes. Thank you. Have a great one.
Take care, everyone.
Bye-bye.
Bye.